What is going on, everybody? And in this video, we're providing you a state of the market in stock picks for October 28th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market. Don't forget to drop that like either, because it's much appreciated. But nonetheless, this is pretty much what we were waiting for. This is something I've been talking about all week. The core CPI that came out this morning for ECB. That was actually the rate increases that came out today. 75 points, again, added to essentially ECB hasn't raised rates in almost a decade, and now they're raising them at such a rapid pace um, that the last time it's happened, we've crashed. That's not concerning. It's okay. We still got hopium. Amazon barely beat. Apple barely beat. Sales way down. Amazon dropped 20%. Meta dropped 20% yesterday after hours and continued to sell during the day. Absolutely mind-boggling, these hits that these corporations are taking, but we're okay. Sales aren't doing great either. They're coming in lower than expected. Um, Projections are very hard. Things are going to get worse. The forecast isn't looking great. And you have to, again, understand that we're going to come in with two more 75-point basis moves before we can consider even dialing back. It should be concerning. These things are playing out essentially as my thesis has gone. It's not saying we didn't pump, because we pumped. This is a pre-earnings pump. We waited all week for Appl, and Appl, it didn't get completely obliterated, but it shows a lot of weakness. We're not talking about gaps anymore. We're talking about breaks, and that this continued 75-point basis moves, if they continue, are going to do even more damage. Lots of concerns for Q4, and normally that's a big buying season, obviously because of the holidays, but it's a big concern, something that I think that we're going to see massive issues, because today reported that we beat expectations for growth. GDP is highly manipulated. There is no way. How are you going to convince that the value that I bring is essentially still positive right now? Things are bad. Some things are better than others, given. Yes, the strain and relief on some things have been, but those things that really matter are extremely strained and stretched to where people can't afford these other things. So, of course, you're not going to get as much demand or as much inflation on some things, because people can barely even afford to just be alive. But with that being said, this is where we're at. Tesla showing a lot of weakness last week. And then Microsoft as well, right? They've all taken major beatings. Google took a major beating. BA took a major beating. But somehow we're continuing to hold. People are continuing to buy in this fact that this hopium that we're going to dial back. And it's just the next monetary policy, 75-point basis move. Okay, because we don't know what the next core is going to be. The core is going to be reported after the fact. But in December, on the 14th and 15th, I believe it is, you're going to have the core the day before, and then you're going to have monetary policy the day right after. That one's really going to be pivotal. The market is really bad. There's no easy way to beat around the bush and hope that we're just going to fly back up. Tomorrow, I expect a really bloody day. Maybe. I mean, we have flushed pretty heavy already. I've been waiting for this break for about a week, because the other data we were getting just wouldn't move the market. The GDP thing, the market tried to break up today. I'll flip back over to SPX here. We had this massive spike on the fact that GDP coming out of the gate was great. Again, we had a hard ceiling roughly, or closer to that 3,900. This is obviously going to be gapped down to here by the morning. If it doesn't break here, actually, if it breaks down below the 3750 tomorrow, guarantee we'll be down by the roughly around the 37, if not more, tomorrow for that. And so that's what I'm watching for, that bike on SPX. Obviously, upside, any kind of pump, I'm shorting tomorrow. Things are bad, and to think that they're not bad and just trying to avoid them is not going to help. Again, there's still way too much stuff out there. The things that are costing more and more money, and understand that families are having to move in together. Generations whereas people would move out, right, and then and people are starting to move in with their parents again, and brothers and sisters again, to be able to support families, because you just can't afford to have your basic house, a roof over your head. It costs way too much. It costs pretty much all your paycheck, plus if you have kids, that's all the daycare expenses you have on top of everything. And then you got to feed yourself, and you got to provide transportation, and you got to clothe yourself. Those things in itself are just expensive. It's just expensive to be alive. But the reports show that if you're not alive and you live in a box on the street, then you know what, you're cool. There is no inflation. But nonetheless, I mean, things are in a really bad state. So sorry to kind of go on a little tangent there, but these are the things I've been talking about. There's no true proof that things are turning around yet. Everybody's trying to jump the gun on the bottom of the bottom of the bottom. It's just not quite the bottom yet. It doesn't feel like the bottom yet. I believe we still need that one stronger leg down that really cleanly breaks the 3,600 and holds at least for a day or two, and then potentially pumps back up again. But every time we get down to that 3,600, there's massive buying down there, which we could be very well revisiting now. We've had our pre-earnings run, right? We got like 3-4 days straight pushing up. Now it's time to sell off. You can't see it here, like I said, but on the SPX, on the mini, you can see it still pretty red. And again, I believe we'll gap down below this 200 tonight, the 375, and then we'll continue to push back down, retesting that 3,500 tomorrow, or 3,600 potentially tomorrow. It really depends on how much steam it gets to the downside tomorrow, because again, companies are in a really bad state, and so that's what we're looking for tomorrow. Again, I think we could see a clean break of this 37.53 tomorrow, and then so that would essentially break us back down into the channel, like I've been talking about. If we do wake up there tomorrow, if we can hold, which could potentially happen, 37, especially with the manipulated numbers as a GDP, and maybe in the jobs being what they were, maybe the market will attempt to try to hold. But earnings are the truth, and they'll tell you what's really going on. And it's definitely not good. This is the Super Bowl of earnings, and things are reporting major weaknesses. And then you still haven't even seen the full outcome of what's happening with these rate increases, and understand that the Fed just can't dial back. It's just not going to stop, right? And understand the damage, like how much damage it's going to cause and how long this is really going to last, is that these companies are still going to struggle. They still have to keep up, because the Fed just can't stop and then start laying off rates. They have to hold them for a while to make sure that inflation does not go back up. It's the last thing you want. Then you think things are bad now, they can get really bad fast. And so watching those levels on SPX, the dollar is attempting to push back up on the daily. Typically, this looks like a retest and potentially start selling off. It's typically what you get here, but also understand that this thing could still consolidate, and you got major weekly support here at the 200 weekly that I showed yesterday. It hasn't even touched in a couple months, actually. So we should get a nice bounce, and again, major support. Normally you don't have to touch right on it before it does bounce pretty heavy. So the dollar is still very high, again, 110, could potentially even go higher. And just when you think that things are starting to turn, you have to realize the market's completely irrational. That's where you have to try to remain neutral. Again, my thesis has been bearish, but I'm not opposed to going to the long side like we have the past couple days. but ultimately understand that you are in a bear market. It's been a bear market all year. It hasn't been fun. It's very choppy. It's very wicky. So not fun at all. Tesla finally touched the 20 EMA daily. Hard rejection. Again, we'll see this right back down to 200. Question is, will it finally break 200 and go lower? So kind of watching that tomorrow. Again, for some reason, this market want to pump. It needs to break back over the 132 for me to be bullish, at least to the 150. I think get a solid run up to there. If for some reason we do go positive tomorrow, again, I think the odds of that happening is very unlikely. BA had a little bounce, I think, before the next sell-off. Watching this critical level here, the 137 breaks back down below that. I think we can sell pretty heavy back down to the 127, then potentially to the 122 for BA. Banks, again, hard resistance. These things start selling. If this thing doesn't open below 124, you're going to get some heavy selling down to the 116 tomorrow. So watch that. And then it breaks that. Again, we're going to go revisit that 102, 101 mark. This thing's still got some ways to pull back, at least down to the 1 or the 328. Again, it's going to need to break that for this to start coming down. But everything starts pulling back tomorrow. Again, any weakness in the banks, I think the rest of the market's going to come down. Obviously, tech is taking a really bad beating. So looking for continuation plays. And then last but not least, we'll go ahead and pull up Appl. Again, it started selling off heavily towards the back end of the day, which is interesting. Right now, there's the call obviously going on, so this thing's going to wick back and forth, but still not good news. Again, barely beat estimates, not by much. So if Appl can hold tomorrow and not break below the 141 mark tomorrow, if it does break below this, I see some pretty heavy selling. But again, if Apple's going to start heavily selling, that could be a real big issue. Aside from that, and the rest of the market is extremely weak, and the banks give out, the rest of the market's going to go with it. So what more of a way to end the week on Super Bowl earnings week than to start selling off, because things just are not looking good. And again, we get another 75-point basis move. It's just pure fear at that point that we're starting to see the damage. And I think that's what the market has been missing to this point, is that it hasn't seen the damage, so it's okay. Once it starts actually seeing the damage, it's going to panic about what these rapid rate increases actually do. It's not just about me talking and then the market goes up and no, you're wrong. These things take time to play out. And this is why you have a general thesis about what's going on and realize kind of the time period in which these things play out take time, especially a lot of the different things I talk about. I do a lot of intraday stuff. So that's why I have a daily thesis, and then I have an overall thesis about what's potentially playing out. So, and that all depends on the events that are going on throughout the day, and if the dynamic changes, because it can change on a dime, and then kind of can essentially trash your whole thesis. So, right now, so far, so good. So, we'll close it up, and we'll see what happens tomorrow, and then take it from that point. So if you made this far, I do appreciate you. Go ahead and drop a like. And until next time, I'll see you guys later.